The global bond route. Let's bring in our next guest who has slightly reduced her allocation to U.S. large caps in favor of mid caps. With us now is Erin Gibbs, Senior Partner and CIO at Main Street Asset Management. Erin, always great having you with us. This rotation to smaller names, is this a valuation call?
Very much so. It's really when we're looking at the relative attractiveness, when you're looking at particularly forward PEs, not so much past historical PEs. The mid caps are extremely undervalued from a relative basis. And if you look at forward PEs, mid caps are trading at about a 32% discount to large caps, which is very unusual because typically mid caps actually trade at a premium. So we've got an absolute inversion of relative valuations and really extreme. Now, we know that this call may be a little ahead because we haven't quite seen a contraction or a turning point. But we felt that given the extreme valuations of the equities as interest rates are becoming higher, fixed income is becoming more attractive, we wanted to just slightly reduce our exposure, particularly to the mega caps, because we've always known that those were more vulnerable to downturns, and put our bets in a more relative, safer bet when it comes to valuation and downturns.
You mentioned the rate environment, and we heard a number of analysts now talk about the ongoing global bond route, right? Where does that leave your call on perhaps tips as well as just traditional treasuries?
Right. So this is something that we still need to have a fixed income exposure because as interest rates are rising, obviously investors are going into treasuries, but therefore with rising yields, we're also seeing prices being pushed down. And we've used TIPS, inflation protection treasuries, to help our investors basically retain the value on the pricing side because the prices have declined so much and you haven't made it up on the yield side. The yields on the treasuries are still very high, but the prices have been trading almost in line with your longer term treasuries. So you no longer have outperformance on the pricing side. But because the yields are so much higher, we're still heavily overweighted on TIPS versus traditional treasuries. But we're looking for that turning point because the TIPS are basically saying, because their prices are flat, they're basically saying that investors are no longer so worried about inflation, that they're pretty happy with what the rates are now and the prices now. And so any change in the relative price performance between TIPS and treasuries would immediately indicate us that it's time to move back into traditional treasuries versus inflation protection.
Erin, I think one of the things that is surprising to me, last year we were talking about we would have hit peak for a lot of things, peak growth, particularly in light of faster inflation, right? That we were managing expectations when it comes to future earnings season. Are we now having to revise upwards expectations of growth?
Yes, that's actually the good news. Even though the growth rate is slowing, we're still seeing positive revisions going forward. And so as Q4 is, the reporting season is about 2/3 of the way down in the U.S., we're getting a better sense really of what's going to happen in 2022 thanks to the guidance. And surprisingly, the 2022 EPS growth for the S&P 500 has been revised upwards from about 8.5% to almost 9.5%. So that's a good revision just in 4 weeks. And that also says that clearly they think that profit growth is going to significantly outpace inflation for the year. So another positive sign. So even though growth is slowing, look, any year where you're getting 9% positive EPS growth is a good year for a company, and that's a good stable point for the S&P.
When you take a look at potentially inflation and cooling, if that's the case, or even if it doesn't, which of these companies and sectors do you like in terms of being able to outpace that price risk?
So obviously financials do very well. They've had a lot of positive revisions. We've also seen energy do really well, but that's a very volatile sector. And we find that, timing is quite difficult. So we're really looking at, core companies. Now, obviously, we've seen a lot of companies with social media that just have core earnings regardless of inflation. And certainly there are companies that have pricing power, but we're really looking at high quality companies because even in the face of inflation, investors will still head towards those companies and their prices will hold up. So we're not so much looking at inflation protected companies, just higher quality, so that those are the stocks that investors will keep going to.
Erin, always a pleasure having you with us. Erin Gibbs, Main Street Asset Management CEO.